Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, which is the best strategy for day trading a price action or a technical indicator? Answer by John Morgan. Full disclosure, I am a trader. It's how I make my living. I wake up in the morning, do some strength training at the gym, make breakfast for the family, shower and put on a suit and then walk downstairs into my home office and spend 1,216 hours a day trading and monitoring and learning. That's how I pay our mortgage, pay for my truck, my wife's car, our health insurance, put food on table, etc. etc. I love it. My God, I almost lost everything to get to where I am, but I love it. It was the most horrible and near suicidal experience of my life to become profitable, but I love it. Anyone who wants to trade, I think you are dumb. I think you are going to suffer a horrible experience and you need to walk away. Anyway, I have to vehemently, but respectfully, disagree with answers that suggest technical analysis has no statistical evidence to prove it is profitable over any sustained period. That is, in my opinion, patently false. There are a number of professional and advanced degrees and licenses that one can pursue in the field of technical analysis. It is most certainly profitable to use technical analysis in the markets. It is the greatest tool used for profitability in the markets. But to your answer, the answer is both. Price action is simply the identification and study of, well, price action. Observe. You don't need moving averages here. You don't need trend lines. Just look at it. Price action trading / naked trading is just a natural look at the movement and rhythm of price. This is done by learning how each candlestick behaves in relation to where price is. But oftentimes that is not enough. Well, really, that is not enough at all. Technical analysis is a toolbox. There are just a crap ton of tools you can use. You just need to find the best tools to use along with the least amount. That last part there is important. Let's use some of those tools on this used pair. I know that looks like a lot to take in, but let me quickly explain those lines. Those lines represent a simplified version of harmonic levels described by one of the great fathers of technical analysis, W.D. Gann. This simplified version is called the Murray math system. Each line has its own behavior. That thick green line is a major harmonic. Yes, like music. Any major harmonic level is going to represent very powerful support and/or resistance. On the bottom of those lines we see a yellow line called the inner 1/8 week oversold, fast reversal. What this means is that when price moves here, there is a 69% chance that on the first test of this level price will reverse and that volume will increase towards that level. Now just observe through price action and these harmonic levels how you can trade this using just probabilities of behavior. The oscillator below, Composite Momentum Index, is from Constance Brown. She would heartily disagree with technical analysis not being profitable. She of course writes numerous books that are essential for passing the CMT and other exams. This oscillator is essentially a RSI of an RSI with a volatility measurement in it. Consider that the oscillator has an extreme overbought and oversold default level and observe what happens when those levels are reached or are sloped to those areas. You can combine all of those tools to make one powerful and successful and profitable system. Postscriptum. Obviously, I gave very short descriptions of the above images, but if you spend enough time Googling and reading and researching, you will find out all of those things on your own. Answer by Mehrdad Timur. Use a trading indicator with price action is the best happening way. Trading indicators as a form of technical analysis are an important part of the trading system and strategy of many traders. Whether traders are looking for a way to determine a trend or a buy/sell signal, technical indicators are the first line of defense that they use. I know we hear that a trading indicator is a crutch, but in reality, there is nothing inherently wrong with a trading indicator. It is simply a tool that can be used to frame price and help a trader better understand what they are looking at. You may not want a trading an indicator alone though. You won't get a complete picture of the market if you only focus on the indicator, and I will show you below how price action can make you a more complete trader. Indicators analyze past data. Trading indicators lag price because they are a derivative of price, unless you are using a trading indicator based on volume, but they are used by traders to interpret what price has done and what price will potentially do. That is not a big deal, and those people that bash indicators and ramble on about the lagging nature of indicators have their own agenda. You don't need to pick a bottom or a top, and many traders make their money during the meat of the move. Getting in the market may be later than buying or selling at the extremes, but that is not a big deal. Getting out of the market while waiting for an indicator to give you the nod may cost you though. The bottom line is that the purpose of a trading indicator is to help determine a trading opportunity, a lack of a trade entry, and when to exit your trading position. Chart first. Trading indicators second. I tell people I speak with to use what the chart shows you first and indicators second. I'm going to point out 2 ideas, but don't think that is all there is. I could write a book. Or 3 on usage of indicators of all types. For now, I will stick with 2 ideas. Let's consider using the moving average trading indicator for trend determination, which is what many traders use them for. At a glance, you know if the market is up or down according to what you determine accurately shows the current trend on the time frame you are looking at. Here we have a 20-period simple moving average that can show trend in a few ways. If price is trading above it, we look for longs. Trading below it calls for shorting opportunities to be hunted. Not shown on the chart, but if price is crossing back and forth over the moving average, chances are you are in a consolidation and would not take any trades depending on your trading system. Our Trading Tips blog has an article on 2 trading indicators you can use to determine a market in chop called the Bollinger Band Squeeze instead of using the moving average. You can also use 2 moving averages, and the crossover would highlight a pending trend change if you need a little more confirmation and objectivity in your trading. These are the 9 and 20 simple moving averages, and I've placed arrows where the crosses occur. You'd be looking for longs when the thin line crosses to the upside of the thick line, and shorts when it crosses below the thick line. I've also placed a yellow box where you will see the 2 moving averages converge. This indicates the potential of a consolidation, and you may opt to play a breakout from this zone. Price action trading with moving averages. You could play each and every cross of the moving average, but trading is not that simple. You can use the information a technical indicator gives you along with basic price action trading knowledge to start to form a workable trading strategy for yourself. This is the same 920 moving average chart from before, but we are looking at some basic price action in relation to the trading indicators. We've crossed to the downside, but price action has not registered a lower low after the lower high, LH. We would not be looking for shorts even though the moving average has told us to either short the cross or trade a pullback to go short. Reading price action allows us to ignore the lagging indicator and save ourselves a potential losing trade. Price action is showing low momentum into the peak, and we can short a break of support before the moving average crosses to the downside. If you were waiting to trade a rally short after the moving average crossover, it takes almost 2 weeks before we trade into the 920 trading zone. While the moving averages converge, we can already see signs of consolidation after the shadow puts in a higher high, preventing a short trade. The red line indicates a smaller range inside the larger range, and a break of the smaller trading range front runs the larger break. An obvious reversal candlestick that pushes into support from the left of the chart. The inside bar that follows could indicate a long trade, depending on your trading strategy, long before the moving averages cross over. You can see that using a technical indicator combined with price action offers a more complete way of approaching your trading charts. With that, you hope your probability of trading success in the long term increases, and you begin to take trades that have a higher odds of giving you some traction into positive territory. Trading indicators are not a complete package. Indicators can offer us an objective look at the market, and for most of us, that can keep us from doing stupid things. But you can't trade them in a vacuum. Even though our trading systems use trading indicators to frame your trading opportunities, the trading plans provided hit home the importance of trading adjustments around structures such as support and resistance. You've seen how using simple trend structure can keep you from blindly shorting a forex pair, giving you a losing trade. You've seen how price action showed you a consolidation which stopped you from taking a pullback trade to the downside. Don't underestimate the power of combining a lagging technical indicator with the present price action. It can save you some grief and offer up stronger trading opportunities. Avail best online discount broking DMAT and trading with Zero to reduce your brokerage prices to zero, as they provide zero brokerage promise for investments. They also provide free online stock market if you sign up. For intraday trading, they charge only 0.01% or RS20/executed trade, whichever is lower. I am trading with them. I love their platforms and concern. For Indian traders, click here to open an account. For US traders, click here. Note: if you sign up with this link, I get some fuel to give more content on relevant topics. You see a hell lot of added profits to your trading account with the lowest brokerage possible in the industry. Answer by Surya Kamal. I will tell you a simple idea which one can follow consistently to fetch some good returns in stocks intraday trading. 1. The stock which has higher volatility is better to be chosen for intraday trading. 2. One methodology to identify such stocks is the top 5 gainers and top 5 losers of the day. 3. At 9:30 a.m., find the top 5 gainers and top 5 losers of the day. Below is the snapshot taken from Money Rediff site. You can even the same info in your trading terminal during market hours. Source: image taken from Mutual Fund India, Rediff Money Wiz website. At 4. These stocks, when blended with technical analysis factors such as risk-reward ratio, trading by the trend etc., can be used for intraday trading. 5. Traders focus on developing a trading system which they believe will deliver consistent returns. Developing a system is stepping stone for being a good trader, but if you fail at execution of your plan, you will never be able to make money. Having the trust on the trading system and execution plays a vital role in their success in trading. Few things which can help in your trading. Always have an alternate plan to protect your capital if you have series of consecutive losses in your trades. This can help your emotions overrule you during losses. Do not think about making overnight success. Be realistic in your expectation and always focus on creating wealth consistently. Cheers, Surya. www.returnwealth.com